Hey, welcome back to the Hub channel. My name is Brandon, and this is the new high probability short term live trading with Mike Wade from Michael Wade Trade Coaching. In today's show, obviously, we're going to be talking about the FOMC meeting, what Mr. Powell said, and how that's going to affect the markets going forward. I cannot wait to hear Mike's thoughts there. We're going to be doing a quick market review on that. Last show, we had a couple of trades that we put on, so we're going to go ahead and go over those trades, as well as talk about Mike's Sniper Guidebook giveaway, another live trade that we have for you guys here today. And then, of course, if you guys have any charts or symbols you want Mike to look at towards the end of the show here, go ahead and put those in the chat right now. But Mike, get on in here. If you don't know Mike already, he is the founder of Michael Wade Trade Coaching. He knows his stuff, and I love his trading style. So pay attention to what he does throughout the show today, and you're going to pick up on that. Mike, obviously, we're going to talk about the markets. Obviously, we've got to talk about what happened yesterday. What are your thoughts? How you been, by the way, bud?
I've been doing good, man. I live in Costa Rica.
Yeah, that's true. Okay, so market decimated yesterday a little bit. I mean, it started to take a turn for the worse. We haven't seen that in a while. Why did that happen? I mean, what did he say that just made everybody so mad that they weren't expecting already? That's what frustrates me. It's like, you knew he was going to say what he was going to say. It's like you have to wait for it to trickle out of his little mouth before it starts to happen.
So exactly. You know, first off, I wouldn't want to have the Fed job. Would you, Brandon? I mean, my gosh. He can't win.
About the most hated job in all the world. Well, yeah, second, maybe third most, but yeah.
Maybe the third most, yeah. But he's up there. That job is up there. And I often watch I don't often watch it, but yesterday I watched the press conference. Oh my God. Watching that is just like nails on a chalkboard for me. And I don't want to diminish the job. It's a hard job. They're looking at a lot of data. And so here's a chart of the SPYs. I can kind of like talk to it a bit from the charts. So, we've had high inflation, which is coming down, which is good news. Inflation's down by 2 points. We've got to get it down to 2%, or the Fed does. It's currently at around 3.4%. So the Fed wants to bring inflation down to 2%, and things are moving in the right direction, but the economy is growing at a pretty good clip, and the jobs market is still hot. And so if he cuts rates too soon, then that could spur on inflation rising again. So that's this, he's got his foot on the gas and his foot on the brake at the same time. Brandon, when I first learned how to drive, that's how my dad taught me to drive. It's like he's trying to figure this out. And for some reason, people were expecting him to say, well, maybe we're going to cut rates in March. That wasn't going to happen. I'm surprised too, Brandon. He said, no, we're not going to cut rates in March. It's the same story. We got to wait and be careful and be guarded and cautious. And the markets said, I don't like that. And they crashed. Well, I mean, I wouldn't call that a crash, but there was a solid correction after he revealed what we already knew. Brandon, my mother's British, and in England, they have a saying called the baby spit the dummy. A dummy is like a pacifier. So the baby spits the dummy when it gets upset, and the market spit the dummy and came down pretty hard on some high volume. And so now the question is, of course, where do we go from here? Now, we could get a bit more of a correction. I look at support levels 480, 470 on the SPYs. This is the ETF that tracks the S&P 500, of course. So I think we might come down to 480, find some support. But Brandon, everything's still the same. So why? So I'm not expecting a big correction from this point. Maybe some solid profit taking. That there, by the way, Brandon, right under my pointer there, all-time high territory on the SPYs happened yesterday. No, sorry, the day before. What's today? Wednesday? Thursday? Tuesday? I don't know. The day before the Fed announcement. What day is it?
Days all blend. I mean, I think it's Thursday now, but yeah, a couple days ago, I think it hit all-time highs. And with that sell-off yesterday, we're looking at 480 definitely on the table. Just looking at your chart there, we could sneak down even a little bit lower, maybe 475, 470, but that would be a lot. But that would give us another leg up, because just like you said, nothing's changed fundamentally in the market. We're still just like we were. But I also am I guess of the opinion that we might have needed this little pullback. So this might have been welcome pullback. And I think it might give us more legs to even go just a little bit higher once we start to bounce again. What's that red line there? What moving average is that red line there?
That's the 50-day average, which
50-day?
corresponds
Okay.
to, let's talk about lines in the sand just a little bit, because this is a big part of the system. And, I've just drawn a line at 470. And 470, of course, is not quite 470, it's 470. But anyway, 470 is a round number. 480 is a round number. Right here, 460 round number. And what you'll see is there's commonly at those round numbers, there's bounces that happen right there. The above my cross was a bounce right off 470. So it'll find support at 480. If that's breached, then I would expect 470. And then if it breaches 490, then that would be a signal that we might be on to higher heights. So we'll have to wait and see. The futures, Brandon, just to let everybody know, you can go to CNBC and get the futures, and they're flat. So the Dow's down 0.06%, S&P's up 0.29, NASDAQ, which got hammered yesterday, is up 0.49%. So the markets are kind of like digesting the move, and we're going to have to wait and see which way they go from here.
Yeah, this will be interesting to watch over the next couple of weeks to see how this thing plays out. So now that we're looking at this and now that we've kind of seen this stuff, how did that affect? You put on a trade last week here on the channel. How did that affect that? How did that trade play out? Walk us through that and what your thoughts are on how the results were.
Yeah, this was a sniper as good as they get. And you know what happened, because I do
know what happened. You're pretty excited. This was a good one though, but I think we gotta definitely emphasize how fast the profit was made on this one too. And so go ahead and hit this up. This is good.
Yeah, let me tee it up a bit just to remind everybody what we were up to here. But this day here, right when my cross is, Humana came out and said, our earnings are going to be terrible in the next week, and the stock tanked. And then here they announced earnings, and guess what? They were terrible. And then the stock gapped down again. And so what we did here was
same thing that happened to the Fed. Exactly. Hey, our earnings are going to be terrible. I don't know. We don't believe you. So it turns out the earnings were terrible. Oh, okay, we believe you now. It's like,
and kaboom! It got taken behind the woodshed and beaten twice, and then it tanked all the way to 350. And what we did was we sold one of these credit spreads, and I put this order in, and we sold the 390 calls and the 390, and we bought the 390-250 calls. This is a credit spread. It's a slightly advanced, it's not a super advanced option strategy, but it's more complicated than just buying calls and buying puts. I do have a guide that we'll talk about. That's free. You can learn about credit spreads in the guide. But basically, Brandon, we drew a line in the sand at 390, and it didn't fill right away. And then just after the show closed on Thursday, the stock made a run up, and we got filled on this thing right around 10 Eastern for 70 cents. This was in a Thinkorswim simulated account, 70 cents. And then an hour later, the stock came back down, and we were able to pull this one off and netted 35% in 1 hour. That's not bad.
Not bad. That's extremely. So 1 hour. If you were to ever annualize that, if you were able to do that every hour, can you imagine those numbers? Anyway, but yeah, 1 hour. That's not difficult, obviously, but it was really good. But it was a really good setup. And the thing was, you played it off of information in the market that you already knew was out there and coming, and it was like 90% of the trade was made for you, and all you did was just execute it, in a way that was really good on our show last week. So I think it was really cool how that thing played out. I think it was awesome.
Yeah, exactly. And Brandon, I want to emphasize a point here. Now, this wasn't. I just followed the rules of this system. So, I've been trading for 25 years or so. Maybe it's 26, a long time. And when I first started, I wasn't using rules and systems. And then when I embraced rules and systems that tell you exactly when to enter and exactly, most importantly, when to exit, that's what this is. And so, every Thursday we come in and we refresh these rules with live trades. And if you can embrace the system and practice, you'll find that over time, typically you'll be around 90% winners and the average gain around 10% with a hold time of an average of 8 days, 7 or 8 days. You know, Brandon, if you annualize that, that's a really nice return. So that's the system. It was generated with a system. Not all of them are 35% winners. This is an exceptional one. You know, we usually average at around 10%. So that was a really good one, Brandon. And then we had one other that. Go ahead.
Oh yeah,
go ahead,
yeah. I mean, and 10% ain't bad either. I mean, 10%. If you average 10% with 90% win rate, I mean, you know, something to talk about for sure. The other trade was what was it? LUV? Was that the other trade that you put on there?
Southwest Airlines. Yeah.
Yes. Okay.
And but you know, just to emphasize the 10%, it's not a lot, right? But every 7 days, it sure is a lot. You could take the same money, trade it 3 times, and if you manage to get 10% on average each time, that is a 30% return in a month. All right, now that's like just stacking up. If you take the same money, do 3 trades with the same money, and you make 10% on each, then you've literally generated 30% on the same money. So many traders hear 10% and they go, not worth it. Yes, it is if you're in and out in every 7 or 8 days. So now this one, Brandon, remember I was saying to you, I said, well, this was a student trade and I liked it. Southwest came out with really good earnings. And when we were looking at it, it was dancing with 3250, which over here was support. Support became resistance right there at the red bar. And then it hit 3250, a round number, a resistance level. I call them lines in the sand. Same thing, but they work at round numbers very well. And I said, I don't know. I'm a little worried that might hold. And so what we did is we sold a credit spread right down here at 2950 below this blue line, which is the 200-day average, and below 29, which are 30, which was also support. And we got a little bit beneath. And so what happened after we got filled on this is the stock said, taking a break, comes down. Let's zoom in on this because I want you all to see this. This is the power of these lines in the sand. And I'm going to spend a lot of time talking about them because it's the foundational technical technique. What am I trying to say, Brandon? It's important. So look here. It comes down, bounces off the 200. Again, bounces off the 200. Dip below the 200. Bounces off of 2950. Here, bounces off the 200. Yesterday, bounces off 2950. And we do nothing. We're not going to do anything on this trade unless we can buy it back for 10% of our original credit, netting 90% of our max profit, or if the stock closes below this line in the sand and it doesn't want to so far, then that trade will ultimately be a winner. We've got about a week left. Here's the current status of the trade in a risk graph. I use tools. This is a tool, a really great tool to help me to visualize trades in what's called a risk graph. And so I've got my eye on this, and you know, it gets a little hot. We're down a little bit of money on this one right now. We're down 17%, but I do nothing. Even though my emotions might kick in and say, oh my God, what if the stock drops? I might lose more money. Forget that. Rules. If the stock closes less than the short strike here, which is 29.50, then I'll pull it off for whatever I've got to buy it back for. And I'll take maybe a $75 loss or so, depending on how long it takes. We have 9 more days, and this trade will be a winner, provided the stock stays above 29.50. And that looks like that's what's going to happen.
Well, that's the opening bell there, Mike. I want to get to your next trade right here, right now, because I know you're anxious to get that put on for us. But I'm glad that you showed us that love trade, along with your other trade, shows us that you are human a little bit, but you're just following the rules as well, and you're going to let those play out, which I think is super important. So what trade do you have for us today? Let's get right to that now because the market is open.
Align Technologies. They make Invisalign. I've used the product. And the stock came out and blew out earnings and lifted their future guidance. This is textbook classic. It's even better because now the stock just opened up above 300, which is now a support level. We have the 200-day average, which is also a very strong support level. It hasn't been above 200, the 200-day average in a long time. The last time it was above the 200 was back here in September. So that is a good, this is so perfect. I can't even say it loud enough that we have the 200-day average now as our protection. So I'm looking at selling, coming in, and I'm going to be conservative because I want to stay as far back away and maybe make about 10% on this. So I'm looking at 275, and I might lift it depending upon what credit is actually available. So what I'm going to do here is sell a credit spread right, or try to sell a credit spread right at 275, and then I'll sell the put at 275, and then I'll buy the underlying put. All right, so let's just go right into a simulated environment. This is Thinkorswim simulated environment. I'm not going to take this trade myself, and I want to show you what's up. So here's the current live chart, and I'm going to go into trade. And I'm going to use 14-day options is typically where I want to be. I've got a 15-day option that expires on Feb 16, and then I'm going to go find my line in the sand at 275, which is right there. All right, so I can see here that if I sold the 275 puts and bought the underlying put at 272.50, there's about 17 cents of credit there. Is that enough? Is 17 cents credit enough on a 2.5 point wide spread? And there's math that you can use. This is right out of the guidebook. I'm just going to check here. There's 7%. So basically this is formulaic. You've got the spread width, and if you subtract the spread width minus the credit that's available, 17 cents currently, my max risk will be the width of the spread minus the credit. So my max risk 233, and that gives me a 7% return on investment. I want at least 10%. So Brandon, what that tells me is that that trade's not going to work for me. I need to lift up my credit spread closer to the heat in order to make a bit more money. I want 10% at least. Now I know this is math. I get it. It's probably hard to follow for some of you. And that's why we have that free guide that we'll tell you about here in a minute. So what I'm looking at doing now is maybe lifting it up to 280. So I'm going to lift my line in the sand up to around 280. I'll go into here and I'll just, oh, now we're getting 65 cents. Hold the phone. 65 cents. Are you serious? I wish I was doing this one. This is a good one. All right. So now it looks like we can get 65 cents. That's 35%. Yes, please. I want that, please. Line in the sand all the way at 275. So let's try to get that. It's showing 67 cents. How many contracts can I get if I get 65? If I do 2 contracts and my max risk is 185, then per contract, then I'm risking 370. I want to stay below $500 to keep my risk contained. The average is 2 to 3% of your total portfolio value. So I'm assuming I have a $25,000 account. This is really important. Don't put too much money into any given trade. Trading 101. So I'm going to do 2 contracts. I know I'm going fast, but I got to get this because the prices move around a lot at the open. 65 cents right there. 67. I'm going to go back to monitor here. And I'll drop it down a little bit. Let's drop it down to 65 cents. Now it's down. Let's go to 60 cents. It's now down to 62. So I'm going to try to get 60 cents. See how fast it's moving, Brandon? Now it's at 55.
Yeah, I've watched these things every time we do this, and this is just the nature of the market right when it opens too. So, I mean, 65. I throw that thing at 50 cents and call it a day because 50 cents still gets you what, like 23% or something like that. Right now, this is looking like a really good trade setup. Yeah.
Yeah. So I'm going to leave it in at 50 and just let it sit there for a bit. So Brandon, the reason that we like to start the show at 15 minutes before the market is because in the morning after news like this, option traders come in droves, and they want some of that. They want some of those options. And so market makers are taking orders, and you can get filled. It's like dropping a hook in the water in a feeding frenzy with fish. You can often just grab fish pretty easily. They bite much more frequently. So now let's do this. I want this one. I'm not too worried about, let's see what 40 cents will give us here. Okay, even at 40 cents, there's 19%, which is really good. 10% is my minimum. And so I'll even take 25 cents on this one. I'm not going to get aggressive and go after more credit by lifting the credit spread higher because I want the probability. All right, that should fill here shortly, Brandon. I'm going to let that marinate for a bit, and we'll see how that works out. And while we're waiting, we've got plenty of time here, looks like. Perhaps we could talk about, what do you want to talk about, Brandon? The guide?
Oh, no, you bring up something good. I was hoping you'd actually bring this up earlier, but yeah, tell us about your guide, why people need it, and where they can get this bad boy.
Yeah, the guide, I go fast, credit spreads, calculating return on investment, all those things. And it's at first, it's too much for most to deal with. So I've created this comprehensive guide that will walk you through 5 steps to identify stock opportunities, check the news, lines in the sand, constructing a credit spread, managing the credit spread. And it's just a really good way for you to follow along what I do. And the hope that we have is that you'll read the guide, come on Thursdays, and start practicing with this system. I would recommend that you get the guide. It's in a link right below our faces here. Grab it, read it, and join us every Thursday, because this is what we do every Thursday, live trading. It's fast paced. And so I think you need some kind of guide to keep yourself oriented. And it's free.
Yeah, free's the best number, obviously. And we do set this show up in a way that Mike can kind of go through and explain what he's doing and then set this trade up that he has working right now. I did have one question about a stock while we're waiting for that trade to fill, if you want to take a look at it. Tesla. Yeah. I know we saw some crazy moves in Tesla last week, and I don't know if you heard what happened to Elon Musk over in Delaware over the last week as well. Pretty crazy situation. I don't know how that's all going to play out.
What was his bonus? 30-some billion or something?
55 billion. I thought it was $55 billion is what I saw reported. And so he, $55 billion. I don't know if you can take a loss of $55 billion in one day because of one judge in one little state, but he does not want people to incorporate in Delaware anymore. So what are your thoughts on this stock going forward now? I mean, should we have saw a bump after that news or not? What are you thinking on this one?
Well, we didn't get a bump. The Tesla came down hard. I would imagine, I mean, logically speaking, Brandon, it seems like if Tesla's not going to pay Elon $35 billion, that there should be a bounce, and I didn't see one. So I'm a little bit unsure about where Tesla goes from here. What do you think, though?
Honestly, I think they're going to still fight this. I think they're going to appeal this thing. I think obviously he's going to fight this because the voters voted for him to have that pay structure in place. He met every single milestone along the way there. I mean, I don't know if he deserves that $55 million, but he did exactly what he said he was going to do, and that's what the shareholders voted on. And you have that one holdout who owns, from what I heard, 9 Tesla shares. And it's like, are you serious? Can you even do that? But it is what it is. And so I think we'll watch Tesla. Tesla, you never count out of the race by any means. Obviously, it's had a nice downturn. Tesla's one of those ones, might look to put an entry in, a long entry in here soon. Just depending on where this thing goes and how this next little thing plays out. I think if they can solve this issue, kind of move on, and then get their profits, get some better earnings outlooks, I think Tesla might be one of those things that might be a little bit more tradable. But right now, I'm not going to touch it. We'll just see where this thing heads, Mike.
But I tell you what, Brandon, what I would do with this one, I think it'll probably channel between 200, which is resistance now, And look what it did at 180. You see that? The low of the day is almost exactly at 180. I'm telling you, round numbers, increments of 5 and 10 and even 20 are often really good support resistance levels. So what I would do on Tesla is I think it's going to go sideways for a bit, channeling between 180 and 200. But if it breaks above 200, starts to fill this gap, then that's when I would consider going bullish on Tesla myself.
Okay. I like that read. I think that's a good read there, Mike. Okay.
Well,
did your trade fill? I thought I heard
it did, yeah. So look, I had to bite my tongue because I wanted to go see. We got 70 cents. What? Wow.
What? No way. What is that? 40%?
You know, it's like feeding frenzy. I want some Align options. Give me some options. You know, it's like there's so much so many orders, so much volume that you just put I know I have lines in the sand, and now I say lines in the water. Put a fish hook in the water at a price and just see what happens. We saw the price go from 65 to 70, down to 45, down to 50, all over the map. Just set it and breathe, which is hard for me to do. And we actually got filled at 70 cents there. So let me show everybody that order, Brandon, so they can try to replicate. So we just got 70 cents on this bad boy. All right. And now this is the exciting part, because if we got 70 cents, then that's a 39% return on investment in 15 days potential. We'll buy that back for 10% of the original credit, 7 cents, and we'll net somewhere in the neighborhood of 30% on the 33%, 36% or so, 30, whatever, you know what I mean? Less than 39, about 36% in less than 2 weeks. So that's this world. And you know what happened to Humana last week was it was so volatile. We got a good fill in the morning, and then an hour later we took it off. That's a distinct possibility on this one. I love this.
Crazy. Well, okay, congratulations on that one. I think that's going to be a really good trade, and you put that on really well. So let's talk about this right before we wrap up, because we have like 2 more minutes here, Mike. Earnings. Are you looking at any more earnings over the next couple of days? Just if you just wanted to mention just something that you're looking at right here.
Yeah, there's 3 stocks that announced today. There's a graphic that we have here. I got this from Earnings Whispers. It's free. EarningsWhispers.com. You can get on their email list, and they'll send you this chart. And you can see that Apple, Meta. I don't have the chart in front of me. What's the other one? Apple, Meta, and
Amazon is what the last one.
Amazon, yeah, I can't believe I forgot that one. So those 3 announced after the bell, and those are if either any one of those surprises to the good side or the downside, you're going to see some movement. And so I would say put those on your radar. Get the guide down below, put those on your radar, and be ready tomorrow morning around 9 o'clock Eastern, and start to go through this process. Practice. You'll have the video of this call later this morning. You can watch the video and get yourselves ready to snipe some profits on those 3 massive tech stocks that announce right after the bell today. So yeah, be ready on that one. I am.
All right. I know you are. Well, I'm excited, Mike. This has been an awesome show, and I'm really excited about, oh my gosh, that last trade, 30+%. It looks like we're setting up for another 30+%. I cannot wait to see what happens when we get back together next week and talk about these trades, Mike. Your trading style, I tell these guys, I tell everybody, this is one of my favorite trading styles. I love the fast profit, the high probability trading, because you're using what's happening in the market. So it's not even like, risk is involved, but it just doesn't seem like that high of risk. So I just love what we're doing here. Mike, thank you for coming by the show today, and thank you all for dropping by. Please subscribe if you haven't already. Get Mike's Sniper book. You need to get that thing. It's absolutely free. We're going to put the link down here so you guys can click on that and just get that book right now. Mike's Sniper System. He knows what he's talking about. He explains everything that we're going through each and every day. But as for now, we will see you next week here back on the channel. We'll see ya.